On Greece, where time is running out for leaders to agree to more spending cuts in exchange for more bailout money. Ashley Webster is on the story, and I just saw sort of the headlines lighting up that the prime minister now asking his finance minister, just give me an estimate. What would it cost if we left the Eurozone? How much would it cost us if we actually defaulted? Not necessarily the positive signs, because last week you were saying any day now.
Well, and as you just said, time is running out. It's been running out for Greece for almost, let's face it, 2-3 years now. They've been living on borrowed money for quite some time. And here we go again. More ultimatums, more deadlines, all being missed as Greece tries to cure its debt problems on two fronts. Firstly, still negotiating with those private creditors to restructure the debt, up to a 70% haircut. That goes on. Meanwhile, Greek Prime Minister, or interim Prime Minister, Lucas Papandreou, desperately trying to get his government cohorts to agree to austerity measures to get the next round of bailout money. And let's face it, these political leaders who head the coalition government, they each represent a different party that makes up this loose and practically very weak government right now. They don't want to agree to it because their names and faces will be attached to it. And, of course, we have elections around the corner. So it's becoming political. But bottom line is Greece is out of money, desperately needs this next bailout. So it's going to be interesting. I mean, I'm sick and tired of hearing of deadlines because they don't mean anything.
Ashley, though, this whole exercise you're doing is not necessarily aimed at the rest of the world, but to the Greek people themselves. To say, listen, this is our doom. Unless we suck it up, this is what we're looking at?
Exactly. Well, let's look at some of these austerity measures because, let's face it, Greece is going into its 5th year of recession. And for austerity to really pay off, it's going to have to be cut to the bone, to say the least. Public sector layoffs, cutting minimum wage, which right now is $985 per month. That's gross pay. So there is room for cuts there. But they're cutting and freezing pension programs. They're going to have to slash all of their spending by $2.6 billion this year. Health spending, cut it by $1.4 billion. And the point is that the Greek people are starting to push back, saying the weakest of our society, those people who are unemployed, the sick, the retired, are being literally being forced to endure something that they quite frankly can't. Is there sympathy out there? Well, you could argue that the government spent like drunken sailors, and now this country of Greece is really facing horrific times. This is why they're pushing back.
They have to pay their bills in March, though.
They do, March 20th.
So are we basically waffling up until then? I mean, how much time do they have?
That's a good question. There's a lot of belief that, again, they'll fudge this, they'll muddle through, they'll come up with something. But let's face it, is it really an answer? We're going to be in the same place again 6 months or a year down the road. The point is they say they're going to make these cuts, but they have yet to really prove it. And I've got to tell you, tomorrow we're going to have big protests in the streets of Athens again. There's a national strike that's being called. And I just wanted to get this statement in from one of the union leaders who put out a statement to the government saying that the current policy of austerity is turning workers, it says, into pariahs, jobless people and pensioners into paupers, and is depriving our youth of any hope. This policy has already pushed Greeks beyond their limits and must be stopped at any cost.
Any cost.
Any cost. Well, of course, the cost would be out of the Eurozone. And, of course, that could lead to, a UBS analyst said that could lead to all sorts of chaos, including civil war.
And the stakes are high yet again.
Yes, they are. And the contagion is the big fear, of course.
Absolutely. Ashley Webster with the latest out of Europe. Thanks.
Well, despite what happens in Greece, our next guest says that the region has already slipped into a recession. Joining me now is Peter Serrentino, Senior Portfolio Manager for Huntington Asset Advisors. Peter, even if the region has already settled into a recession, which a lot of analysts agree with you with, the stakes with Greece right now, perhaps Spain, Italy, and Portugal later, why are they so high? Why is this still dominating our markets?
Well, a lot of it has to do with, I think, the unknown. You don't hear a lot of talk anymore about credit default swaps, which are kind of the small cousin to the real giant in the room, which are the interest rate swaps. The whole banking sector right now is all tied together. And effectively, the ECB has been trying to recapitalize the banks in Europe. And our banks are inexorably tied to their banks. And so it was one of the reasons why our market was range-bound last year. You couldn't get a rally going because the financials just couldn't keep up the pace. So, we're still a prisoner of those events over there. And it's that fear of the unknown which really haunts our market. Even though we think our domestic economy gets through this year, it's still the financial markets peril with what's going on in Europe right now.
Peter, the last time you were on our program, you made a call for gold to hit $2,000 an ounce. You had made the prediction happening in April. Do you stand by that? And what is the pressure? I mean, we have all this uncertainty in Europe. Then we got these jobless numbers on the unemployment rate ticking lower on Friday. You got a lot of push and pull here. What is going to send it up more than almost $300 an ounce?
Well, to some extent, I think what we got was with the announcement that the Fed doesn't foresee raising rates until 2014, that effectively, we're into QE 2.75, I think was the phrase I heard coined over this. And that quantitative easing, every time that's rolled out, it's always been good for the price of gold. It's tended to spike commodity prices as people sort of flee for the life rafts, if you will, to try to preserve their wealth and what they think is basically a debasement of the currency. And so as long as that threat hangs on the horizon, I think gold's going to have an attraction. It finished a long run. We had a correction. We've had a consolidation. It's shown signs of wanting to break to the upside again, and our belief is that we'll get some event. I can't foretell what that will be, but the market's starting to shape up as though we'll see it spike between now and April this year.
Do you think that we're going to see this tremendous run-up just in the underlying commodity, our ETFs, or maybe the gold miners a good play, because we know that they end up getting a little bit more buffered when we see these highs and these lows as well?
Exactly right. The miners have really not kept up with the metal itself for some time now, because I think there's been this belief that that this is a spike, it's a bubble, and that at some point it will break, and so no one wants to pay full price for any of the miners. That said, they're now trading at pretty attractive valuations when you look at just what their forward production can be. And the smaller the miner, the bigger the discount. So, if you want a safe haven there, assuming that gold's not going to collapse completely, just given the level of buying, the miners make an attractive place to start to put some money to work.
Peter, before we let you go, Friday's jobs number had a whole lot of people on Wall Street going back, sharpening their pencils and taking out erasers. Have you changed some of your assumptions about our economy, Fed action, and so forth based on those numbers?
Really, we did. The only thing we saw a little progress on, at least in terms of what we view as the important number, is the U6 number, which shows up at the bottom, which is the total workforce. A lot of people have been unemployed for so long, they're simply dropping out of the headline number and moving into the lower categories. We did see U6 drop down. It's getting closer to 15% now. That gives us a little cause for hope in here. But again, that's a huge chunk of the workforce that's not employed or underemployed, and that really puts a damper on just how fast our economy can move. Yeah,
it really does. I mean, the general media had on the pom-poms, but there was a lot of scary stuff in the mix there. Peter Serrentino, Huntington Asset Advisors. Thanks a lot. We appreciate it.
Thank you.
Well. All right, Shivani and the judge, here's my take on the never-ending saga in Greece. Now, the powers that be must do some Socratic questioning. In the end, the country will likely accept austerity, and we could finally see a short-term resolution for the current debt hurdle, and the markets probably will cheer. But the embedded problems for Greece, as well as Portugal, Spain, and Italy, go way beyond massive haircuts for current bondholders and cuts in civil service worker force. See, it's debatable whether the work ethic in these countries can improve enough to be competitive or allow austerity to work. Now, there's an even bigger question, and it's whether these countries are smart enough to be players in the modern world. There's a universal test of 15-year-olds, and Greek kids only beat Czech Republic and Turkey among so-called developed economies. In reading, they actually scored even lower in math and science. Spain, Portugal, Italy, they helped to round out the bottom of that list. Add in the fact that 40% of Greeks have never used the internet, and it's easy to see that this is a nation that's moving backwards. The Greek drama was known for the last-minute emergence of the ghosts in the machine that saved the day. This saga probably ends with Greece just a coast of its former glory. Still, it's hard to believe that the birthplace of Socrates is too afraid to ask the hard questions because of the devastating answers.
Pretty amazing.